Traders' attitude to the US dollar is mixed. Investors are pricing in the possibility of a sooner end of the key rate hike by the Fed Reserve. Notably, such measures were taken to cap the surge in inflation. Investors are also taking into account weak macroeconomic reports, which are exerting significant pressure on the greenback. According to the recent data, the US economy is growing less than anticipated. It's a high benchmark rate that is limiting economic expansion. Now the Fed Reserve has to decide whether they continue the monetary policy tightening or take a pause in order to support the economy. The next FOMC meeting is scheduled for the upcoming week. In our video review, we will take a closer look at this and other events. Data on the business activity in the US manufacturing sector will remind traders about a possible recession. According to the forecast, the ISM manufacturing PMI will remain in the negative area, that is below the 50-point threshold that separates contraction from expansion. Manufacturers are likely to continue reducing production for the 6 months in a row amid expensive loans and a gloomy economic outlook. Against the backdrop, investors may sell the US dollar, supposing that such a signal may affect the Fed's decision to loosen the monetary policy. Thus, the Reserve Bank of Australia has already reacted to alarming signals from local producers and paused the cycle of the key rate hike. However, the central bank is ready to resume tightening monetary policy in a case of necessity. On Tuesday, the Reserve Bank of Australia will hold a meeting, and experts suppose that the benchmark rate will remain unchanged at 3.6% despite still high inflation. Local businesses and consumers are supporting such an idea, whereas speculators may react with a decline in the Australian dollar. Meanwhile, traders will get reasons for their speculation about a key interest rate hike by the ECB after the issue of the Eurozone inflation figures. On Tuesday, also will be turned to the initial estimates for April. Analysts, which are monitoring the macroeconomic information from the region, think that in April the consumer price growth will stay at 6.9%. Thus, the absence of a positive dynamic may allow the European Central Bank to continue the tightening cycle. What's more, the ECB's officials announced the intention to raise the key rate by 50 basis points. In this light, the expected inflation figures may boost expectations of aggressive measures, thus bumping up the euro. And the necessity of a further key rate hike will also be confirmed in the United States. The FOMC officials are constantly repeating that the rate decision highly depends on the labor market conditions. Next week, traders will have a chance to learn such information. On Wednesday, experts at ADP will be the first to disclose the estimates on the non-farm employment change. Notably, the US Labor Department will issue its reports on a Friday. Let us return to the traders' attitude towards the US dollar. While the overheating market and high inflation point to the necessity of a higher key rate, other indicators of the US economy confirm the opposite. On a Monday, the United States will report a decline in its manufacturing PMI. On Wednesday, traders will focus on the situation in the services sector. Although the indicator is expected to rise, its growth pace is likely to slacken, thus approaching a 50-point threshold. Nevertheless, the FOMC rate decision will overshadow all other events. For a long time, the Federal Reserve has been announcing its intention to combat high inflation in an intent to stabilize consumer price growth. To reach the goal, the regulator has to raise the benchmark rate. That's why most analysts suppose that at the next meeting, the key rate will be hiked by 25 basis points. In fact, traders have already priced in this decision. It means that the interest in the greenback will depend on the press conference. If the US central bank decides to continue its combat against inflation, the greenback will gain in value against all currencies. How it will going to be in the short term in financial markets, we will definitely tell you in our news releases. Subscribe to the channel and follow news with us. See you soon.